So what's up everyone? Welcome back to my channel. I'm sorry. Okay, so hello. So the stock market today has risen to recover some losses as investors shake off growth concerns. So here's the S&P 500 up 0.83%. This one represents like the S&P 500 biggest companies in America. The US 100 mostly for tech companies rise 0.41%, although even though Biden applies some non-competition agreement this just today to control some of the you know kind of not really good tactics, like kind of bad tactics used by big tech companies to restrict competition. So it show a very, very positive number. And lastly is the Dow Jones, which focus more on the kind of value stock, also rise. The difference is like the Russell 2000 and the Russell 3000 old Dow. This is actually not a actually this one can make sense because people put money in all in big money. As you can see here, actually it's still in the uptrend from 2021. It's still like really high on the uptrend. It is up a lot of point, to be honest. So if you like hold the it from May, you can still got a lot of money from trading just the Russell 2000 or the Russell 3000. Next, okay, so explaining for this, the three after the three indexes pull back from record level as concerned over the pace of economic recovery player. So like U.S. Treasury yields also gain to reverse course from Thursday. So this is the U.S. yield. It's gained a lot. So US equity investors have been appraising the likelihood that a surge in Delta variant of the coronavirus could weigh more heavily on global growth than previously anticipated. In Japan, the Tokyo Olympics are now set to be held without fans later this month due to a jump in COVID cases in the country. And in China, an executive body signed the country's central bank may cut its reserve requirement ratio for the first time since mid 2021. In this through an easing monetary policy move that would suggest a lack of confidence in the country's economic recovery. That's why yesterday there are some pullback in the stock market, suggesting like some kind of concern about the growth rate or whether or not um, this is the time for the recovery of the U.S. economy, especially when Delta variant rise a lot. These global concern in These global concerns weigh on risk assets in the U.S. this week, and Silico stock here. Silico stock which benefit from a strong economy, like including airlines, cruise line, leisure firms, and small cap stock largely underperformed on Thursday, underscoring investor chatter over whether the rebound might be derailed. The equity market haven't priced the Delta variant as a big risk yet. As you can see, it's really positive today. And I think one of the reasons is why is if you look at the United States, for example, where the vaccination rate are much better than other countries, I don't think like the market right now is rising in that we will see some type of repeat of what we had originally. So I could see like some scenario where there's a headline or a warning in the media where the Delta virus is really starting to hit hard and causing a large sell-off. So I also pointed to the Delta variant as a factor contributing to the Thursday stock market drop. So it's dropped a lot as already explained in the previous video, while highlighting the confluence of other uncertainties still facing investors as well. I think it all compact into growth for the economy if the Delta variant continue to gain in severity that it is right now, then our business going to close again. This is the real question. What does it mean for the consumer spending on services? So if you have a Federal Reserve where you reserve, let's look a little bit at Fed Fund. So you have the okay, so Fed Fund increased a lot. I'm sorry. Actually, well, I'm just wonder why is the haven't updated since today. Why is like this? I'm sorry. Wait a minute. Hmm. Okay, actually, it still keep quite low. So, way to wonder if you start to pull like you have Federal Reserve, if they, actually this you shouldn't consider this. It's just increase a little bit from 0.06 to 0.08. So if the Delta variant continue to like you have a Federal Reserve where you have to wonder if they start to pull liquidity out the market, which means they increase the Fed fund rate, then what does it mean for consumer and for growth there? Then there's gonna be a third leg of like a third leg of this store is the infrastructure deal, and you have anticipation of two large deals that were going to be coming, which again would provide some stimulus and growth, but it looks like not going to be easy as a role, uh, as easy of a role as many people anticipated. So, okay, that's it. So that's it for today's market. Um, so let's look a little bit at the world market indicator just to say if like so it's not a surprise like the UK and all the Europe market really positive because US market and all of the Asian, I think because of the Delta variant, cost fees, of course, because they're gonna close the market, like the country, for like 14 days because of the new rises in Delta variant. Other than that, it's all really nice and there's nothing to worry about. The US market right now doesn't go on the Delta variant big risk yet, so we don't know. I think there should be some risk management thing for the firm. So that's it. Let's look at the jumping data a little bit. Oh, so let's look a little bit at the commodities. So it's all gain, quite a lot of gain. Forex. So USD has gained strength against JPY, but still like compared to other currency, it is a little bit lose momentum now. Okay. I'm sorry. Let's wait for a little bit because I want to update you some news about the financial institution industry. So please stay with me a little bit. So, because it's quite important. Because like the worst shit can affect your portfolio, right? So Activists in investor tech aim at insurance amid pandemic rebound. Mm, Although there's not much news today. Okay, so this one I think is important for inflation hedge. Investor turning to gold allocation. So because as you already know, the US industry really moving really fast right now. I mean, in terms of money pumping into the market, it's actually a very normal thing, like explaining why a lot of asset turning to gold as a asset allocation because they want to hedge against all of the inflation can happen. That can happen. I'm sorry, this one. So basically, looking to hedge against inflation or driving an expansion in institutional allocation to gold. However, the commodity price movement performance likely to be heavily influenced by interest rates. So about 30 to 33.8% of current gold investors plan to increase to the metal in the next 3 years. Further, about 39% of institutional investors without gold exposure but who have a target or consider investing in gold plan to establish a gold allocation over the same period. So it's not just, in fact, the diversification benefit that gold brings to the portfolio will actually mentioned more frequently than inflation hedging in terms of key benefit. To side of rising side, Western have taken the view that the recent high are temporary. If though policymakers are wrong, the economy could enter an inflationary cycle to quality by investor and a potentially painful correction in asset valuation. This one. This has actually happened in the housing bubbles when the stock market just skyrocket really high. It's like with like bombing money more than its true values. As a top three driver in the long term, concern and interest rate were both cited by many of the institutional in short-term location. So this means like the top driver does not really fear about the market inflation to diversify there. That higher rate will be offset by the longer lasting Korean fiscal created to support these may include inflation, current debasement, and higher exposure risk on asset in portfolio. Interest from strategic. Hmm. Is going to be transition of payment. Still upside potential, there are significant obstacles, including the potential that it could put a damper on demand for gold jewelry in key market. We do expect 2021 to be positive for gold, especially from an investment perspective, but we do see that there can be challenges, whether it's from rate or from the consumer side. Gold prices rose to the record levels in the late summer of 2020 as the impact of the pandemic gripped the world economy. After dripping down since August 2020, the price of gold began to climb again in early 2021, but dropped in 6.6% in the first half of gain in the second quarter. Commodity analysts with the T wrote that the precious metals continue to trade terribly weak against real estate, suggesting speculators have not been pushed to hmm, as inflation should push imply the market pricing is too hawkish. With gold already managing to hold on into it, this scene would ultimately catalyze a return of. Hmm. Okay. Okay, so basically it's just like transition to gold, but there's still some concern about gold being like not as much in demand in the gold jewelry, in the key market gold jewelry. So there's still a lot in concern, but now actually there are a lot of risks involved, and we need to be able to identify which kind of state we are in. Personally, I think we are quite in the okay. The U.S. easing monetary is effective. However, the U.S. the global economy hasn't recovered yet. So maybe like the market bumming is not going to the right director. I think they can just slow down the kind of the purchase of asset a little bit, tapering it a little bit, like just keep at the right level, not too fast, to keep the level of the economy still booming, but not like too much to affect and they can subsidize some of the lower employee sector, so that can be helping rather than just pumping a lot of money into the market without really know if the production really meet the kind of the demand or not. And yes, that's it for today live stream. So, sorry, not live stream video. So I really hope that you guys can tune for my weekends video, which is about conservative portfolio and currency forex analysis. I really hope to see you guys there. So hope you guys have a next best weekend. Okay, before we go in, let's look a little bit of the charge here. Okay, so around this result still bad. The government 2 year, 5 years lower, so people betting like a short term higher, which is, I mean, the Fed has increased their kind of their tapering of asset, but um they may be push more in the money fund market, and the market rising follow the correction, and some of the article about Delta variant may be restricted by Pfizer by up to like 80% to 90%, so it's quite positive number. So saw you like in the weekend. Love you and hope you have a wonderful trading day.